Hello everyone, welcome to Just Invest Today. Today we have a good video for you guys. Today we're going to be talking about 3 investment advantages that we have over the hedge funds and all the institutional investors. And this is important to know because you have to realize where you stand in the market and what are your advantages. Because if you don't, you're just going to get killed in the market. Because we have to separate ourselves some way. Guys, we are not going to beat all the hedge funds using information. They have probably way more information than we do. Like, let's be honest. Like, they have people on the ground floor going into companies, searching around, doing all that stuff. They have a team of 1,500 thousands of people. So we're not going to beat the hedge funds that way. We're not going to beat the hedge funds with analytical knowledge. Like, they have crazy computers and perfect DCF analysis and all of that stuff. So we're not going to beat the hedge funds that way. So how are we going to beat the hedge funds? It's all psychological, guys. So in this video, we got to break it down. What are the 3 advantages that we have over all the institutional investors? So let's get into the first one. But before we do that, guys, please like this video, subscribe to my channel. It's going to help a lot. Let's grow this channel. Let's get it to these 500,000 subscribers. And we're almost there. So guys, leave a like and subscribe to my channel. So let's get into the first reason or first advantage. So our first advantage that we have as retail investors is time horizon. So let me break this down. We're going to be able to actually look into the future and allow our companies to grow. And we have to be able to think in those terms because all the institutional investors do not have time to watch their thesis grow into a company. So what I'm talking about is when we find a company and we find what we believe is going to happen into this company, right? You got to understand that it's a business. Stocks are not these short-term things you trade. So when it's a business, it might take a year, 2, 3 years for your investment to grow into the thesis that you predicted for the company. Do you think institutional investors have 3 years to show or lag the market? Like, they don't have that time horizon that we do as value investors because there's no one to judge us. We're just by ourselves, lonely in this activity by ourselves. So we don't have to worry about that. Investment theses don't take 4 or 3 months to have that 20, 40, 50% gain, guys. We were so spoiled last year. Everyone was making 40%, 60%, 70%. And now people are thinking that's like natural, that's normal, guys. That's not the case. These gains take time to grow. And institutional investors do not have that time period to actually evaluate these companies and wait around for these investment theses to play out. So that's one of the main advantages that we have as retail investors. So the second advantage that we have is we don't have to chase short-term performance to actually adhere to what other institutional people are doing. We're not judged based on other people's results. So we don't have to follow the institutional imperative, guys. We're not judged by other people's results. Do you realize that if you're lagging other institutions 2, 3, 4 years, guys, a lot of people are going to be taking their money out of that fund. They're going to be like, what are you doing? You're not doing enough, blah, 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 to these guys, to these hedge funds. So they're going to be chasing that short-term performance. And once you're chasing that short-term performance, you're going to sell the stocks that you're doing good in for a quick paper gain. But we don't want to do that. We want to see these companies grow and be able to reinvest their money into that company and keep growing because we see that company getting stronger. But the funds are not going to be doing that. They want to see that paper gain because they're short-term focused. They're comparing the results to everyone else in the market and where they stand. So we don't have to focus on that. We don't have to compare ourselves to anyone else in the market. So that's a huge advantage. And that ties into having that patience. We are going to be able to sit with our money for a long period of time. There's going to be times in the market, 6 maybe months, you don't find one stock to invest in, and that's okay because nothing is cheap enough. Nothing's meeting your requirements to invest in. So why are you just gonna put money into a company that you really don't like, or it's you don't see it as a good price right now? Like, why would you do that? We're gonna find and wait for these companies to meet our requirements before we invest. Institutions can't do that. They can't have just a huge pile of cash waiting for 6 months, a year, 2 years. People are gonna tell them. Warren Buffett always tells you that they're gonna be people in the background telling you to swing at the pitch. They want you to swing. They want you to put your money into a company. They don't care what it is, what price it is. They're like, why are we paying you if we're just gonna have all this cash on the sideline, not doing anything with it? So that's a huge thing you gotta think about when you're a retail investor. We're not focused on these short-term results. We're gonna find that one strong company, 2, 3, whatever, that's going to be able to just reinvest their capital back into the company, growing it over time. No matter what the market is doing, we see that business growth. And that's how we're able to stick with these companies long term. When we have that long term focus, we are patient. We're not chasing that short term performance. And lastly, number 3, position sizing and diversification. Guys, when you see one of those strong companies, something with a high upside with the downside risk protected, we want to make these big bets. You don't want to make these 2% bets that the institutional investors are limited by. You see, look at any portfolio of these hedge funds, these institutional investors. They have like 2% here, 3% here, 1% here, 2%. They're highly diversified. We don't have to do that. We don't have to follow that trend. There's going to be some opportunities that are going to look so great. You want to put 15% of your portfolio down, or 20%, whatever. And that's going to make the huge gains in our portfolio when we're that confident in that position. But think about it. These institutional investors can't do that. They're going to be widely diversified. So even if they see this amazing opportunity, they can't just put their money in it like that. They got to be diversified, and just in case, or to suit the imperative initiative. So that's a huge advantage. And then on top of that, they're not going to invest in these small caps, micro cap stocks that we might know more about or have an advantage in, because those small cap stocks and micro cap stocks, they're not going to influence their portfolio by that much, because these institutional investors have billions of dollars, and those are not going to move the needle like what Buffett would say. So they got to find companies where they can put a lot, millions of dollars in without like moving the needle too much. So we got to think about that we have a bigger area of companies to invest in. So that's a huge advantage, because that's when these huge 10x's, 15x's, 30x come from, right? So that's another huge advantage that we have over all the institutionals and companies and all that type of stuff and all those hedge funds. So guys, tell me what you think of this video. List more advantages that we have down below. I'm gonna probably make another part 2 of this video with Nick Sleep, so keep in tune for that. So guys, if you like this video, like it, subscribe to my channel. I'll get back to you in the next video. Peace.